trading is so subjective. So there's no like surefire answer I can give guys on like my exact process, because it's just a multitude of puzzle pieces that I'm using. So not to make it sound intense, but you find what works for you, and you want to repeat that process. But even if I've seen, there comes a point to where it's more reactive. I wouldn't say intuition, but if I see something coming down, even though I have a chart pattern here, but I see a zone right after it, I may not take that signal. I'm gonna wait till it breaks the zone. Different things like little nuances like that is gonna improve the probabilities of different setups. Or for instance, if I'm on an hour, but I had a Bollinger Band up here and it was at the bottom of the Bollinger Band, even if I seen a good, nice engulfing, I probably wouldn't take that trade. I'll wait, like I said, and let the market come back up and get an entry off of the retest of whatever zone I'm in. So I hope that makes sense to everybody on some of the methods. So now I would be like on the 30. And I do use the time frames, the chart work. I'm working in and out retrospectively. So if I see, like now I'm kind of eyeing my zones, wait till it comes down here and I want to see push up. We also got a 50 here, 200. So it could test both of those levels. And we can start kind of marking off areas based off of those levels. So, I mean, we get down here, we can kind of see another area that may give us some interest. 1625. Another way to play it is going off of formation or structure. So if I got a nice push down to any one of these zones and then I started wicking up, now I'm going to be waiting for a confirmation. So I'm going to let price come up, come back, retest, push it up into that structure, looking for a market to show me a clear reversal or going to lower lows, lower highs, higher lows, higher highs. And I want to catch it on the pull down between into the lower high or the first transition, allowing me to have a tighter stop with wider profit margin or potential. So nothing coming up on EA yet, but just to walk back through the trade real quickly. Got a nice zone here that we bounced off of a couple of times. Market does what it wants. It could come back down and test that for a third time. We're zooming in from bird's eye down to a smaller time frame. We're starting to work until we see a channel here. Starting to kind of almost flag. And we're right off the top of that zone. So we're probably coming back to retest that potentially, then give us a push up. We want to break. If you guys want to be more conservative, of course, you want to break this previous zone. So you can either play it, and that explains my whole synopsis a while ago about there's so many styles, so you find which one is comfortable, because one person can come in and just see the break and play it as a breakout and see how far it goes up and may come up all the way up here and pull back. Now that they're in a nice prime position for a trade. More conservative trader may wait for it to break out, give us some type of retest, push up. We enter in on a retest. I do get a lot of traders that ask me, well, Nick, how do we know that it's not a rejection? It's not going to come up here, pull back, and then continue to pull down. Well, my answer would be we don't. So that's why risk becomes important. You place in, and you're trying to just get high probability areas. Every trade is not going to work out. It's going to go as planned, but you have a roadmap to say it breaks down and it pushes down a little further than you expected. Here's your stop. And then it starts to wick up. Well, if you position yourself properly, you can get back in and catch that move up. Now, instead of being conservative, you're more of a breakout trader to ride the trend up. So it's different dichotomies and ways to enter and ways to play it. So that's one of the things that we're going to start hitting in a group is execution.